Good morning, ladies and gentlemen. This is Butch Shorak. It's Monday, March 4th, 2013, and welcome to Market Forecast from Options University. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Looking at the week that just took place, looking at our major indexes, the Dow, NASDAQ, S&P, and the Russell 2000, we see for the week that all of them were in positive numbers, not big positive numbers, but positive numbers, except for the Russell 2000, which usually is our leader at this point, showed 0.2% loss for the week. Year to date, you see that we are at levels that we cannot afford to keep going at as we ended the second month of the year. We cannot go at this same rate over and over again, but it's pretty impressive. The Dow up 7.5%, NASDAQ up 5%, S&P up 6.5%, Russell 2000 up 7.7%. As we see, we are headed for those all-time highs of the market. Technically, the market looks pretty good. We've cleared many of the overbought readings from the Dow, the S&P, and the other indexes. Stochastic and relative strength indicators suggest the market could be settling for a run at all-time highs, and that's exactly what we expect in the next couple months. Psychologically, how are we doing? Well, things are improving. We look at our put-call ratio, and we see that we're around our neutral level of 0.6, and consumer confidence is on the rise. We're even seeing a bump in the housing market as we see that it may no longer be the big drag, and we might be headed for bigger and better numbers as we see the housing market start to make a rebound. Looking at economic announcements coming for the next week, we see that on Monday, March 4th, we have little or nothing coming out that will affect the market. As we look at Tuesday, we see we have the ISM non-manufacturing index at 10 o'clock. Looking at Wednesday, we see have ADP employment, factory orders at 10. ADP is before the market opens. And we go into Thursday where we have our weekly jobless claims taking place at 8:30, productivity and cost taking place at 8:30. And then finally, on Friday, we find out what the employment numbers were for last month as we see those coming out at 8:30 before the market opens. These are the major announcements coming in the next week. The other thing that we've had take place is sequestration. It is upon us. I went flying. I was actually flying this weekend, wondered if I was going to have trouble with TSA. The lines looked about normal, but as time goes on, it could have a dampening effect on the market. Inevitably, we've got our monetary supplies, which keep coming through as people know that the Bernanke group is there to boost the economy, and it certainly has done that as we've had QE, QE1, QE2. We've had other things come through from the Fed to buoy the economy when things are looking a little rough. Looking at the SPX, we're looking at our overall trend. We see we still continue in that uptrend as we are definitely in an uptrend. We almost pulled back to the 50-day moving average, dipped below that 30-day moving average, but notice we immediately turned around and start heading back up. So we are in an upcycle in an uptrending market. All right, well, actually, we'll talk more about that on the next slide. All right, then when we look at the last week that took place, we focus in a little bit. We see that on Monday we had a nice little pullback. We were long past due. We dipped below that 30-day moving average and dipped down. And finally on Tuesday, we began to get a little bit of an upswing, and we continued on up. And then on Friday, in spite of the weakness which took place during the day in the market, notice that we did finish with a upward moving candlestick. However, we did not get a higher high and a higher low as we had a little bit of hesitation, went back down, hit that 30-day moving average, and bounced right back up to end up in positive numbers for the day. We did not get a higher high or a higher low. We actually got a lower high and a lower low on Friday from Thursday. So we are in a bit of a down cycle. We'll see what happens this week. Looking at the futures, which came out begin Sunday night, we see the futures are down a little bit coming into the opening. opening for the second week in the month of March. Let's take a look at the Dow, and we're looking at the Dow. Actually, it's the first week when you consider the fact that there was only one day in March. When we look at the Dow, we see that looking at the Dow, it had very much the same type of movement in it. For the week, we see that we had a nice little upward trend. We had a higher day on Thursday than on Friday, and we look like we're poised to break up into new highs, as the Dow is just a small way away from all new time highs. NASDAQ's about 3% away from all-time highs, and we can expect that in the next month or two. It's exactly what we're going to do, is we're going to break into new time highs as the economy is showing great resiliency, and consumer confidence showing great resiliency in this market. Looking at the NASDAQ, we see that it's lagging a bit as Applenomics isn't coming through. Actually went down to the 50-day moving average, and as the week went by, had very much the same pattern as the rest of the markets. However, notice it's not at previous highs in any way, shape, or form, as there's a little lagging taking place out of the NASDAQ, and most of that can be subjected to Apple, which has such a big position in the NASDAQ. Looking at the Russell 2000, looks very much like the NASDAQ, but notice that as the week went on, we got our nice movement up. Taking a look at the VIX, you see that the VIX shows us that there's not a great deal of fear in the market, as we're spending most of our time in the low teens, actually going down as low as 12 down here. And notice that for the last year, we're basically in an area that is on the low end of the overall market, spending that time there, showing us not a great deal of fear in the market. So now we have an idea of what's going on with the overall markets and the indexes. Let's take a look and see what the different sectors have to tell of us. The first one we're going to look at is we're going to look at the bond market. As we see the bond market, as the market pulled back this last week, had a nice little jump up, and that is no big surprise, as we would have expected that. If you see the market move up, and during the next week, we can expect these bonds represented by TLT, an ETF for the bond market, to begin to retrace, heading back for that previous support down there. So if the market moves up, you can expect that you could make money on the short side of the bond market. Looking at our financials, XLF, our ETF for the financials, we see that it is basically following the overall market, and we see that we're moving up, headed towards previous highs. And as the market breaks up, one would expect that the financials will follow right with it, as the banks have the support of Bernanke, which of course makes them certainly more desirable, in spite of the fact that they are now nowhere near all-time highs. Looking at the oil, we look at the USO, which gives us an indication of the oil market, and we see that it is plummeting, even though we don't see gas plummeting at the stations. We see that oil has been in a definite entered into what we would call a downtrend. All right, and finally, let's take a look at gold at safe havens. We would expect that gold would be not all that in demand, as there's a good demand in the market. And taking a look at gold, we see that that's exactly what happened. As the week went on, the market rebounded. Gold pulled back. So we're not anywhere near all-time highs in gold. So that's the market that took place during the last week. That's looking at our different sectors in the market. And for those of you that are gold members, stick around. We'll take a look at our stocks to watch, and we'll look at our SBX, Apple, McDonald's. And for those of you that are not gold members, if you'd like to see more free videos, so you can go to www.optionsuniversity.com/free gold. So this is Butch Shorak. It's Options University. It's Monday, March 4th, 2013. Gold members, stick around. We'll be happy to go through the remainder of those stocks. For the rest of you, thank you. And we're in that month of March. To our gold members, welcome back on this Monday, March 4th. And let's take a look at where we expect the market to go. Again, reminding you that we are in an uptrend and we are basically headed for all-time highs. Our first target up here will be at 1530.94, and then we will have a double top. We'll see if we break through at this point. If not, it may take until we get a triple top. That's why we're looking at the next couple months to break up through. Ultimately, we're looking for 1570, which was the prior high of the S&P. That's about 3% away for the S&P. Looking at the Dow, we see that we're actually very, very close, and it could cause a little delay when we do hit the all-time high for the Dow. Looking at, and of course, we're not anywhere near the all-time high for the NASDAQ, and probably are not going to go there. Let's take a look next at the some of our stocks to watch. Looking at Amazon, we see that we had a pullback in the market. Let's see what Amazon did relative to that. Amazon has been going nowhere. This is the kind of stock that you might go ahead and take a look at and consider maybe some kind of a condor on this if you can get above the previous highs, as it does not move all that fast, but certainly you can make some time premium on this one, probably on both sides, as it's sitting somewhere in the middle of its current trending rolling stock. Next, let's take a look at Apple. Who would have believed that Apple would be so far down from its previous highs, almost 300 points, as we see Apple headed for new lows, as we see it beginning to break down again. We've got a double bottom here on Apple at 430.47, and if the market does go down at all, it doesn't look like Apple is making any big moves up. And as we look at earnings, we see that it has not done anything since its last earnings, and it will take big news out of Apple to get this locomotive turned around and started to head in the other direction. Looking at our moving averages, the 200 is above the 50, which is above the 30, which definitely tells us we have a downtrending stock. Next, taking a look at AutoZone, we'll have a little bit different look, as we see AutoZone has been moving up nicely. No big move after earnings, even though there was a lot of volume when it was all said and done and didn't do much more than what they expected. Looking at the moving averages, we're trying to get what looks like an uptrending stock, as these moving averages have not yet converted above the 200-day moving average. I expect the next target for AutoZone to be up at this previous high, which will basically give us a triple top, and see if we can break through, as AutoZone seems to be doing just fine in our consumer-oriented market. Next, looking at some of our food stocks, we see that there was good news with earnings from CMG this quarter, and we are for last quarter, this quarter's announcement, and we see that we're headed for this previous high, and if it continues in its current trend, it'll be moving up above that previous high. So CMG, a stock to watch and a position to be in. Let's take a look at Google, which has been a market leader. And looking at Google, we see that it just keeps chugging along on a breakup above here with volume. Of course, you've got your next entry point for Google to go up, up, up and away. And where is that stock split that Google is long past due for? Green Mountain Coffee is trying to struggle back from some of the snafus that have taken place from its owners and from its board, and we see that we're ready to break out on Green Mountain Coffee. With the market breaking to new highs, we can watch Green Mountain Coffee continue in the same direction. Earnings are already over. They were acceptable to Wall Street, as we can tell from the chart, and we're headed towards higher highs. ISRG, our medical equipment, whoa, news causes something like that. But you see, we rebounded it a little bit, and we're kind of headed back up. I might want to watch this to see what it's going to do. It could be an entry above this previous high right there, but it's certainly had quite a candlestick on that day. Next, let's take a look at MasterCard, which is a stock that's buoyed by QE3 and by the Fed moves. We see that it has not done a whole heck of a lot. Might look at some of your techniques that you use with options on stocks that are going absolutely nowhere, as MasterCard had quite a run since last summer, and we see that currently it doesn't seem to be going much of anywhere. Not a good position to hold as a stock unless you're doing covered calls. You also can look at condors on a stock like this, see if you can pull some time premium out of this stock. As long as the Fed is involved and as long as the Fed is backing up this economy, MasterCard should do just fine. Looking at McDonald's, we see that we've made a big rebound. We had come back down to lower levels last quarter, and we see that since last earnings took place, this stock has been on a climb. Our previous high is up there around 102, and if the market heads up, we can expect McDonald's headed for its previous highs. Remember, watch for earnings. They're coming up. Oh, they're a ways away yet, as we're not. McDonald's comes out late in the earnings cycle. Next, taking a look at Nike, who's just been doing it. A nice strong move. Earnings coming up shortly. And we had a stock split on this stock, so this thing is moving, staying above that 30-day moving average. Got a buy signal 2 days ago out of Nike, previous high right up in that level right there, and we're headed for that. That's the previous short-term high. It has been higher than that in the past. All right, and then taking a look at Priceline. Taking a look at Priceline, we see that it's ready to move. Looks like a buy signal coming as we're at that 30-day moving average. If we get a higher high than Thursday or Friday, you got a buy with the target up there at about 720. So nice little short-term move expected out of Priceline if the market is involved. I already had earnings. Obviously, earnings were just fine. This is the kind of stock that should ride higher and higher if the market will participate. So it is a market leader. Now looking at WW Grainger, we see that it just keeps plugging along. Earnings already took place. Earnings are looking strong. Actually, those were earnings for last quarter. It's about in the middle of the earnings cycle, and we see that its target is for previous highs and then continue on up. As we draw a line, we could look at it something like this. So as the upward movement of WW Grainger keeps continuing, as this is shown, very steady movement and very steady incline to the upside as the overall market has floundered and this company has really retained its strength. So with that, this is Butch Shorrock. It's Monday, March 4th, 2013. Remember to use your stops anytime you go into a trade. Plan your trade before you get into it. And then know exactly what you're going to do no matter which way it goes, because you cannot be right 100% of the time. Monday, March 4th, 2013, Options University. Thank you.